Startups are the backbone of the Indian economy. So you must have often seen the government bringing out a number of beneficial schemes for their growth. But did you know that not just through favorable schemes, but the Indian government has also been supporting its startups through favorable tax laws in India? Yes, you heard it right. Hi, I am Tushar Bakshi, a startup advisor at Setindiabiz, where we provide tax, compliance and IPR services to businesses across India. In this video, I will explain the provisions and process under which DPIIT recognized startups can avail the famous 80 IAC exemption under the Income Tax Act. Precisely, I will be covering these topics. Number 1. Meaning of 80 IAC tax exemption. Number 2. Eligibility for startups to avail 80 IAC tax exemption. 3. Step-by-step process for startups to avail 80 IAC tax exemption. And 4th, list of documents required for availing 80 IAC tax exemption. So, let us begin without any delay. What is Section 80 IAC tax exemption? So, Section 80 IAC of the Income Tax Act was just recently introduced in the year 2016 with the purpose of supporting startups through their initial phase of financial crunch. So what it does is, it provides 100% tax exemption to a DPIIT recognized startup on the profit it earns during a financial year. This exemption can be claimed for any 3 consecutive financial years in the first 10 years of a startup's incorporation or until it is eligible to be recognized as a startup. The ultimate objective here is to reduce the overall tax burden so that a startup can increase its savings and later reinvest it into the growth of its business. But are all startups eligible to avail Section 80 IAC tax exemption? Let's see. What are the eligibility criteria to avail 80 IAC tax exemption? To avail of the 80 IAC tax exemption, startups must meet certain eligibility criteria as prescribed in the Income Tax Act of 1961. Firstly, the startup must be in an incorporated entity, so its structure could either be that of a private limited company, a one-person company, a limited liability partnership, or a registered partnership firm. Sole proprietorships are not eligible. Secondly, the startup must have been incorporated not more than 10 years ago. This is obvious, given that recognition as a startup itself is valid for 10 years from the date of incorporation. Thirdly, the turnover of the startup must not exceed more than 100 crores for any financial year since its incorporation. As far as business activity is concerned, startups must be involved in dealing with some kind of innovative products, services or processes, with the ultimate goal of creating wealth for itself or generating employment for the public. Lastly, the formation of the concerned startup must not be the result of splitting up or reconstruction of an existing business. Only if a startup fulfills all these conditions, it will be eligible to obtain DPIIT's recognition and later claim tax exemption under Section 80 IAC of the Income Tax Act. Moving ahead, let me explain the procedure for availing such exemption. Process to avail of 80 IAC tax exemption by a DPIIT recognized startup. To avail of the 80 IAC tax exemption, startups need to follow a series of simple and quick steps. Let me explain each of these steps to you. Step number 1. Obtain the DPIIT recognition certificate. So, we have already discussed earlier that startups must be recognized by the Department of Promotion of Industry and Internal Trade or DPIIT before it runs an application for 80 IAC tax exemption. So, obviously the possession of a DPIIT registration certificate is mandatory, and if a startup does not have that, it must first apply for it under the Startup India scheme. Step number 2. Compute the taxable income. A startup can claim tax exemption under Section 80 IAC for any 3 consecutive assessment years out of 10 years starting from the year of its incorporation. But in none of these years should its taxable income be greater than rupees 100 crores. So, to decide in which year a startup should avail an 80 IAC tax exemption, it will first have to compute the total taxable income for the relevant assessment year and make sure that its amount is less than rupees 100 crores. Once the startup has chosen the relevant assessment year, it can claim a 100% tax exemption under Section 80 IAC, subject to a maximum limit of Rs 25 crores. Step number 3. File income tax return. For claiming 80 IAC tax exemption, startups need to disclose their amount of taxable income and amount of exemption in their income tax return for the concerned assessment year. The returns must be filed before the due date as prescribed in the Income Tax Act. Step number 4. Maintain proper documents and records to support your claim. The startup needs to maintain proper records and documents to support the claim of tax exemption under Section 80 IAC. This is essential in case an inquiry or audit takes place by the Income Tax Department at the registered office of the startup. Step number 5. Log into the Startup India portal and fill out the application. The final step is to log in to the Startup India portal using the credentials received after registering on it. The startup is already recognized, so you can directly open the link to the 80 IAC exemption form. Here, you need to fill in all the details like the name of the startup, its registered address, PAN number, nature of business activity, details of authorized signatory, and few other details about the startup's incorporation. After filling in the details, you are required to upload all the necessary supporting documents, which we will soon discuss in this video. Filling out so many details correctly and with the updated information could be challenging. So, we strongly recommend consulting a tax professional or a chartered accountant for proper guidance on it. Or you can simply contact Setindiabiz, where we already have a pool of qualified and experienced professionals readily available at your service. Now, let's discuss what documents are required to be submitted with the application. So, what are the documents required for 80 IAC tax exemption? Documentation is probably the most important aspect of any application-based process, including the procedure for claiming 80 IAC tax exemption. This is because an incorrect or inadequate filing of the documents can directly result in the application's rejection by authorities, even if all the details have been filled out correctly. Here is a complete list of documents required for a DPIIT recognized startup to claim tax exemption under Section 80 IAC of the Income Tax Act. Number 1. Business PAN card. Number 2. Certificate of Incorporation and SIN or LLPIN. Number 3. DPIIT recognition certificate under Startup India scheme. 4th. Constitution document of the startup, that is MOA and AOA for a company or LLP agreement for LLP or partnership deed for a registered partnership firm. 5th. Copy of board resolution in case of a company, if any. 6th. Copies of the startup's balance sheet and profit and loss statement of the last 3 financial years certified by a practicing chartered accountant. 7th. Copies of income tax returns of the last 3 financial years mandatory if it was incorporated before 1st of April 2018. 8th. Copy of certificate obtained under Section 56 of the Income Tax Act mandatory. And 9th. Video link and copy of pitch deck required according to the stage in which the startup is: ideation, validation, early traction, or scaling. With this, we reach the end of this video. I hope I have managed to answer all your questions on 80 IAC tax exemption for startups here. But if you still have further queries, you can ask us in the comment section or directly talk to our startup experts. The contact information is given in the description box. If you found this video helpful, like and share the video with your friends and colleagues. Also, subscribe to our channel for more informative content ahead. Hit the notification bell and get notified every time we post a new video. Thank you for watching. Watch our other videos as well.